who is really interested in these published accounts? That's what we're interested in finding out. And published accounts, as we know, are once again your income statement and your statement of financial position. Now these published accounts will be posted online by the company. All public limited companies are by law required to publish these to their stakeholders. So all the stakeholders, whoever's interested in knowing how the business is doing, would take a keen interest in what these two statements have to say about the performance of the business. So published accounts, clearly income statement and financial position, and all these stakeholders we know: competitors, banks, investors, government, suppliers. All these are people who would always be interested in knowing how the business is doing, and they do it for varying reasons. For example, competitors do it for making straight apple to apple comparison, how are we doing in comparison to the company. Or if you remember the concept of benchmarking from operations, where you take the best practices of your competitors and try to adopt that in your own business. That can be done by looking at the published account and seeing how the different companies are treating different things like depreciation, how the valuation of inventory is being done, and that can be used as a benchmark for your own business. Banks, they needed to get an assurity that you will be able to pay back the interest, that you'll be able to pay the loan and pay back pay the interest and pay back the loan rather that you've taken for expansion or finance of your business. Investors, clearly they have a keen interest in the dividends and the overall gains that they get from out of this. Now this point here, the gains and dividends, is something there's two different ways shares earn money for people. One's through shares increasing in value, so 100 से 150 रुपये हो गया, so that's an increase in returns for the shareholder, as well as every year they get dividend paid out of the profit. So there's two ways you gain from buying shares in a company. Government would always be interested in knowing how much tax can be charged, or perhaps even if the government is thinking about providing you subsidies, they will be looking at your published accounts and the status of your profit for the year. And of course, suppliers, people who are always buying you raw material, they will be interested in your cash position, because that directly ties in with how timely your payment is going to be to those suppliers. So all these people are clearly interested in knowing what the business is doing, because their interests are in line with what the business is doing. So they have to go through different pieces of information to get a better understanding of where the company is going. Is it profitable? Is it not? Maybe not right now, but it might be profitable in the future. So different ways, different aspects of the business needs to be looked at from the stakeholders, and it's these ratios that help the stakeholders assess the health of the business.